Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, June 2nd, and it is 5:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Back after a brief trip to Mexico for a wedding. Many thanks to Connor for handling the bulk of the video duties over the past 2 weeks. Ted back from vacation today as well, and he'll be back doing videos later this week. And also, congrats to Ted and Connor on their 2-year anniversary with Revere. Those guys have been as high as our expectations were, they've exceeded them. Tremendous additions to the Revere team. We think we've got the best technical staff, best overall staff in any advisor in the country. Let's get into it. State of the market. We are in an uptrend since the O'Neill follow-through days on April 22nd and 23rd. Check the trend gauge over here. Green arrows for leaders, acting very well, continuing to act well. A little bit of weakness last Thursday. One day of weakness is normal. You don't want to see a second day. You definitely don't want to see a third day. That's what killed the most recent rally, but just one day and then an afternoon rally Friday on the leaders. Followed it up with a lot of strength today in leaders. Then we also, of course, track the major indexes across 3 time frames, the short-term 21-day moving average and medium-term 50-day moving average. Both have green arrows, mixed neutral on long term. We got the S&P and NASDAQ firmly above their 200-day moving average. Other indexes lagging, as we discuss in every video. We make the videos that we would want to hear if we were looking to get a soup to nuts overview on what's going on with the market. So what happened today? Out of the gate, small gap down about 0.25% on the S&P, 0.4 on the NASDAQ, quickly turned positive, but then reversed. But then that weakness, the market bottomed shortly after 10 a.m. Eastern time, and we went on a 6-hour higher high, higher low. Not a trend up day because there were some pullbacks, but consistently higher highs and higher lows, led by what else? Leading stocks continue to put on a great show. So bulls shook off the early weakness. S&P 500 and NASDAQ are near breakout levels. We'll take a look at the charts momentarily and discuss it. Here are the numbers. Our 21 over 21 list up a stellar average of 1.97%, 18 up, 3 down. Only one change to the list this week, and one that will be coming off because it's reached a target level for taking profits. We don't talk about that a lot, but we will in today's video. The big eight, this is the Mag 7 plus Netflix, up 0.65%. The RG8 up about 0.8%. S&P closed near the highs of the day, up 0.4. Equal weight just up about 0.1%, though, as NASDAQ 100 led the way, up 0.8%. Equal weight NASDAQ up 0.6%. Dow slightly positive, mid caps negative, Russell 2000 slightly positive, Global 60/40 up 0.4%, flagship GROTECTION portfolio up 0.64%, TurboTection up 0.37%. Let's get into it now. We'll start off with charts. And we will turn off stochastic so you can see things a little bit better. Here's AS. This is our latest addition to the 21 over 21 list. Jumping the gun a little bit here, but we'll discuss that later. So here's the S&P 500. Basically, what we have is a 5-day consolidation within a bigger 15-day consolidation. If we want to draw it out, there's the bigger consolidation after the gap up on the China trade reset, and now a tighter range, 58.43 on the downside, 59.43, and we're very close to that on the upside. So 5-day tight range within this longer 15-day consolidation. Will the bulls break it out? Well, on the NASDAQ, we had a false breakout last week. That led to a 2-day high to low pullback of some significance, but as has been the case over these last 15 days, bulls always show up when they need to. So you can see five closes above the 8-day moving average on the S&P 500. Let's quickly look at the equal weight S&P 500. It's lagging. Note the relative strength line declining. And you know why it's lagging. It's lagging because the NASDAQ 100 is leading. Same line, different direction. And the NASDAQ 100, here's that failed breakout on the gap up after NVIDIA's earnings. No big deal. 2-day pullback. Didn't even test the low that was made the prior week. So certainly relative strength there. We're keeping an eye on, and you'll see this when we get to the keys. Want to break out above that high, and critical that we hold that low from the shakeout after that negative reversal. So again, a 5-day consolidation, not within 15 days because we did make a higher high there. So that's the focus for the NASDAQ. Let's look at the equal weight NASDAQ very quickly. Weakness relative to its big cap market weighted, uh, more highly mentioned index, of course, but also in a 15-day consolidation here. Let's go to the other big cap index. The Dow Jones Industrial Average continues to lag on a relative basis because it is more value focused, but also in a 5-day consolidation within a bigger 15-day consolidation as well. Not quite as strong, obviously. You can tell that by the relative strength line. No chart is complete without a relative strength line on it. Let's go to the S&P 400 mid caps, below the 200-day moving average after failing there 2.5 weeks ago, but undercutting and reclaiming the 21-day moving average today. Relative weakness over the past 3 weeks there. Down on the day, but as I said, undercut and reclaim of the 21-day moving average. And finally, the Russell 2000 small caps, also lagging, but undercutting and reclaiming the 21-day moving average as well. Look for a possible break of this downtrend line that we've been showing, that we've shown over the last 5 days here, and then make a target, make a run. This has filled the gap. Notice that the China trade reset gap up there, that was easily filled last week, 2 weeks ago, actually, on small caps as they continue to lag. Look at the relative strength line all the way up here with this failed breakout of small caps and relative strength line. You can see where it is relative to those November highs on small caps. So those are the major indexes. How about interasset correlation? Take a look at the VIX, down today. Was up earlier, but ended up being down 1.13%. It's in a tight range here. No surprise, a 15-day range, just in line with what the S&P is doing, just the opposite, though, as it's near the bottom of its range. This false spike up here, the only false breakout good, obviously, when you're talking about the VIX. And we're now below the long-term average of the VIX, which is 19.5. Good stuff there. But you can see how much lower it can come, 12.7 when we were rallying back in December. After the VIX, we go to the US dollar. 3 weeks of weakness on the US dollar here, down near the bottom of this about 6-month long range where we saw a false breakdown. We also saw a false breakout. So will the dollar find support at the bottom of this range? We'll take it day by day. As always, no predictions here at Revere. Predictions are futile. People that predict really don't know what they're doing. Uh, Better to interpret. That's what the legendary William O'Neill said, and that's the mantra that we follow as well. So with the dollar weakness, what we saw today was big strength in gold stocks as a gap up and close at the top of the range, up 2.7%. Very nice. We're looking for a re-entry on this as well. But breaking out before gold broke out, Our gold stocks, you can see the false breakout here. They showed relative weakness against gold, but big strength today, up 6.2%, with a breakout in the GDX ETF. Let's take a quick look at silver, as it also had a very nice gap up and breakout from this flat base that it's been forming. Let's go to Bitcoin now. IBIT pulling back for 4 straight days, right into the 21-day moving average. On bonds now, BND, the broad bond index, down on the day after breaking an support line here that I drew over the prior 2 weeks. Bond prices down means yields up. You'll see this in a second. TLT also broke that uptrend line there, and 0TYX, that's the 30-year long bond, breaking just the opposite, breaking a downtrend line as yields popped a bit. And the 10-year TNX really into the declining moving average there on yields. All right, inter-asset correlation finished. Let's go to the tail of the tape. Indexes, stochastics, a mixed bag on the indexes, also a mixed bag on the RG8. There's room for improvement there. Percent versus 5-day, middling at a 47. So there's room to the upside and to the downside there. Consider that neutral, of course. VIX, we mentioned, fear and greed at a 63. Some news. Trump raised steel tariffs over the weekend. U.S.-China trade tensions continue, but they're trying to get a conversation with Trump and Xi scheduled from what I read today. Always a lot of news coming out relative to tariffs and trade and tensions related to thereof. Keys today, staying above the 200-day moving average and the 5,800 level. On the S&P 500, NASDAQ above the 200-day and that support 500 level, not quite to the resistance levels. We're going to put a finer dot on these when we look at the keys for tomorrow. And also expanded the consolidation timeline on the S&P. 5-day consolidation within this bigger 15-day consolidation. 5 days up above the 8-day exponential moving average on the S&P, 27 above on the versus the 21-day moving average. That keeps our short-term expectations positive as long as the S&P and the NASDAQ stay above the 21-day moving average. And of course, we're in a power trend. At the open, well, I didn't adjust this, but I will quickly do it right now as we opened down 0.25% on the S&P, but bottomed 30 minutes in, and then a 6-hour stair step higher and lower, closing near the high. That's positive action. As far as the sector goes, 10 out of 11 of the spider sectors up. Even stronger, gold and gold stocks, semiconductor strong, oil strong to the downside. XLI, that's industrials, IYT, that's transports, and banks were weak as well. You can see the GROTECTION holdings, 2 changes today, an offensive selling trim on Netflix as it approached the profit-taking zone of 20 to 25% above the pivot, and took a few weeks to get there. And we added to Bros on the pullback. These are our holdings. The way we put them, we list them is indexes first, greatest to smallest allocation, then ETFs. The only one is IBIT, and then individual stock positions, highest weighting to lowest weighting. 1.46 adjusted beta. We got a question about why we don't talk about our cash percentage. Because it's misleading. If you have 80% cash, but it's full of slower moving stocks, that's certainly different than an 80%. Sorry, if you're 80% invested in slower moving stocks, that's certainly different from 80% invested in high flyers. So that's why we created this volatility adjusted beta score. 1.00 is the equivalent of having your portfolio fully invested in the S&P 500. So you can see how we're weighted with a 1.46. So it's 46% more exposure to the market on a volatility and beta standpoint versus a fully allocated S&P 500 portfolio. And our balance at risk, 5.31% for GROTECTION. On to TurboTection, one change today, added to QLD. Same listing here of the holdings, broad ETFs, followed by sector ETFs, followed by individual positions, and 1.72 adjusted beta in Turbo, 5.06 balance at risk. So in other words, if all of our stops would get hit tomorrow, that's where the portfolio would be off of the highs. Bottom line on the day, the bulls shook off early weakness, and the S&P 500 and NASDAQ 100 are approaching breakout levels. Keys for tomorrow, we're going to keep an eye on the S&P 500 against those ranges. We'll focus mainly on the 15-day range on the S&P. NASDAQ 100, this really is a 3-day bracket. The high of 529 and the low of 530. That range 511.93 to 526.48. See if we can break through those. So those are the ranges we'll be focused on for tomorrow and the rest of the week. Of course, if they're broken, then we'll adjust our keys. Broken to the downside, we'll get more defensive. They're broken to the upside. We'll look for opportunities to increase or do offensive trimming if things get too extended. All right, on to the 21 over 21 list for this week, and I'm going to start with Netflix. This should be the last week that Netflix is on here. So we reached our pivot plus 20 to 25% profit target. It took 1, 2, 3, 4, 5, 6. This is the 7th week since the breakout. So power from the pivot. In other words, did it get to 20 to 25% within 3 weeks? The answer is no. So following O'Neill rules, you look to reallocate that capital into something at a lower risk entry once you achieve this profit target. So we've cut Netflix from 6+% size last week to a little more than 2%. With a defensive sell breaking the 8 EMA last week, offensive sell making higher highs, and now we're going to trail it with the 8-day moving average, and not giving it a bunch of leeway because I want to point this out. So here is a high that was made on the NASDAQ not the NASDAQ 100, on Netflix here, corresponded with a high on the relative strength line as well. Here's another high. Here's another high. Here's another high. The relative strength line is not confirming those highs. In fact, we've basically just gone sideways. Another reason why no chart is complete without a relative strength line. This looks fantastic. Well, the last 3 weeks, it's really just been in line with what the S&P 500 is doing. These trims, the stock has done 1.25 times what the S&P has done during the holding period. That's why we target stocks that we're looking to do 2 times what the S&P does. So although this has been a very productive trade, didn't quite reach our goal of 2 times the S&P. Get into the profit zone, take your gains, and look for something that's closer to the pivot. And maybe just emerging from a solid base. Netflix was one of the first ones out. Absolutely nothing with this. I'm not saying you have to sell it. I'm saying this is how we do things here at Revere. When I was on IBD Live 2 weeks ago, I pointed to some of the reasons why people underperform when they're first getting started following the IBD rules. And one of them is cash drag. The other one is not taking profits. The market sells off. You get frustrated because you give back a bunch of gains. Remember, O'Neill took most of his gains on the upside move. And that's simply what we're doing here with Netflix. So still on the list, still getting held. It should come off by the end of the week since it's in the profit-taking zone and we're looking for the exits. We hold the next 8, 9 of these names. They've got the green flag. Palantir, had it for a while. We've got very nice profits on this. This is the benefit of alternative buy strategies, buying it in the base, letting it run, go sideways, and now it's just breaking out of this very nice base. So This is one we want to weight heavier. It's one of our top 4 or 5 holdings in GROTECTION and in Turbo. And we're looking to increase our position in this as it's very clearly been a leader. Speaking of very clearly been a leader, GE or Vernova, we've got great gains in this as well, riding the 8-day moving average higher. And again, an early entry, not waiting for the base to complete. Relative strength, fantastic. Robinhood, making a higher high. Can't complain about this at all. Would like to get some more money into this one as well. Tesla pulling back for the second day after this. It reversed just like the NASDAQ 100 did, trying to break out and then pull back over the last 2 days. Nothing wrong with it, though. Hims, very nice hold of the 21-day moving average, 2 days up off of that now, reclaiming the 8-day moving average. I mentioned some concern. I wanted to see it where it failed here at the 8 EMA, and it failed here on the 8 EMA twice last week, but Friday powered above it, made a higher high today. That's what you want it to see. That's what you want it to do. We are looking for outperformance here. Dutch Brothers, we added to this today on the undercut and reclaim of the 8-day moving average. It's still in the handle. So this has, by the O'Neill rules, another 20 to 25% that gets back above that pivot after its well received earnings report, really kind of just going sideways on a relative basis. So we want to see it get going here. Certainly, we want to see it holding the 21 and preferably the 8-day moving average as well. Spotify, great day on Friday. Power off the 21-day moving average, powering ahead today, up 1%, making a higher high. Uh, Not really thrilled with the action on a relative basis, but again, compare Netflix, which is in the profit taking zone, to this one, which is still just barely at pivot plus 5%. So from that standpoint, a bit of a laggard. We kind of want to see this get up and out here. NVIDIA, negative reversal after its earnings gap up, but found support Friday right at the 8-day moving average where we want it to, up 1.7% today and back above the 8-day moving average. And Bitcoin, 4 days on a pullback right to the 21. All right, here's the rest of the 2121 list. Zscaler, powerful second day after its gap up on earnings on Friday. Very strong. Carvana continues to ride the 8 EMA higher. Chewy, back to back nice days after an undercut and reclaim of the 8-day coming into the profit taking zone. We do not own it. Duolingo bounced at the 21-day, hanging right around this profit taking zone, but it got there pretty quickly after its breakout from the base. Boeing, uh, big move up on Thursday on some China news, consolidated Friday, made a higher high today. CoreWeave is just an extremely strong stock. I saw somebody comment to me on Twitter that they used our 60-minute stochastic buy tactic to pluck this off the 8 EMA on Friday. Congrats to that person that did it. Up 8% today. AppLovin coming into this 400 level. NRG, nice tight 3 weeks action after its earnings gap up. EQT trying to break out. Really has gone nowhere over the past 3 weeks, right near that pivot. Toast bounced right at the 21 the way it needed to. And there's AS, nice gap up on earnings. Todd talked about this on the weekend walkthrough. Tight sideways over the past 2 weeks, looking for this to, it's got the power from the pivot, looking for it to work its way higher. And that is the 21 over 21 list for this week. And with that, we'll wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Forgot to mention, please like and subscribe these videos on YouTube. That helps the algos get these videos into the threads of people that are looking for investment advice. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com, our flagship GROTECTION, and also more aggressive TurboTection portfolio designed to grow assets during uptrends start going sideways, we tap the brakes a little bit, get out of the way during downtrends, and we highlight it every night on video, exactly what we do, all portfolio changes and why we're doing it and what we're looking at. Our YouTube audience reached 3,000 over the weekend, another milestone. We appreciate people taking this investment trip with us, completely transparent at Revere. We put it out every day on the line there. We believe in our process that you don't have to be a slave to the market returns. You want to be averages, you just want to be average, then just invest in the averages um, on a diversified basis. We want to do better. We've proven we can do better. The numbers prove it. Give us a shot if you're interested. And that'll wrap it for Monday, June 2nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.